Best supply and demand zones trading strategies. By the time you finish this video, you'll know exactly when to enter high probability trade using the best supply and demand trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Supply and demand zones put the economic theory into a trading strategy using price charts. So, what are supply and demand zones? The supply and demand laws control all marketplaces. When discussing trading in the market, most traders depend on technical indicators to identify imbalances. However, others watch supply-demand trends and zones to formulate a trading strategy governed by economic theory. Banks and other similar institutions create these zones, which are actually price levels where unfulfilled orders wait to be completed. To win over the whole concept of supply and demand, traders need to find smart money orders on the price chart. Moreover, they also need to identify the supply-demand zone correctly. In this video, you will learn step by step what supply and demand zones are and how you can identify them on the price chart. Supply and demand zones are a popular analysis technique used in day trading. The zones are the periods of sideways price action that come before explosive price moves and are typically marked out using a rectangle tool in the stocks, Forex or CFD trading platform. A supply zone forms before a downtrend. A demand zone forms before an uptrend. Supply and demand trading strategies use price returning to these zones as entry and exit criteria. What are zones in trading? You can skip ahead to see how to draw the supply and demand zones for day trading strategies, but we'd recommend a quick background on the investment theory to give you confidence in why this trading strategy works first. What is a supply zone? A supply zone is the price area at which the traders usually sell. This area is present above the current price, where the highest selling interest or potential. When the price hits this level, the unfilled orders get completed and bring down the price. Take the help from this chart to understand the supply zone concept more clearly. This chart shows the price reaching a specific zone, waiting for some time, and then going back down. This cycle will keep repeating itself until all unfulfilled orders get filled. What is a demand zone? A demand zone is the price area at which the traders usually buy. This area is present below the current price, where the buying interest or potential is the highest. This means the demand zone has many buyers available due to many buying orders at that level. This chart will help you understand the demand zone concept more properly. In this chart, you can see an instant move to the upside. That's because when price rallies up to the demand zone, some orders get filled while the unfilled ones get absorbed. Supply and demand market structure. Let's think about the three simplest concepts in trading financial markets. First, when demand is greater than supply, the price goes up. Second, when demand is equal to supply, the price goes sideways. Third, when supply is greater than demand, the price goes up down. There are uptrends and downtrends or price ranges. Richard Wyckoff was one of the first market analysts to explain the interaction of these phases, giving them four labels. First, accumulation. Second, markup. Third, distribution. Fourth, markdown. They can be seen in Richard Wyckoff's classic schematic of market action. It is in the understanding of Richard Wyckoff's explanation of market price action that supply and demand zones are also known as accumulation and distribution zones. Wyckoff explained these phases by the action of the whales, which these days are big institutions like money center banks in Forex markets or hedge funds in the stock market. These big players can't just put their whole order into the market at once because they are accumulating so much that it would move the price. So instead, they buy increments within a specified price range. This causes what we see on the chart as a demand zone. Equally, when they are selling their position, it can't be all done at once, because the selling pressure would send the price sharply lower and reduce their profits, because they would be forced to sell into a market decline caused by their own large orders. So again they sell over a period of time to minimize the market impact of their trades, which creates the supply zone. Eventually the market will break in the way that these whales had been buying or selling, creating a period where supply and demand are out of balance. Types of supply and demand patterns. It's important to understand that there can be several periods of accumulation during an uptrend and several periods of distribution during downtrends. This means that, just like in classic technical analysis price patterns, there are supply and demand reversal patterns and supply and demand continuation patterns. This is important because understanding which phase the market is underlying trend and how long has it been in place determines which are the best demand and supply zones to look for. In an old trend, you will want to look for reversals. In a new trend, you will want to look for continuations. How do you mark a supply and demand zone? Putting this theory into practice, the idea is to find the place on the chart where demand overcame supply for long trades or where supply overcame demand for short trades. Let's go through the process for correctly identifying supply and demand zones. Step 1. Identify current market price. First, you need to spot the current price on the chart. Then, look at the left side of the chart and find a big strong lineup of candles either moving up or down. Typically, supply zones show upward movements and demand zones show downward movements. Step 2. Look left on the chart. Step 3. Look for big blue or big red candles. Step 4. Find the origin of the big candles. Finally, you need to identify the origin of the price movement on the chart. As in this chart, the price rallied up with small-sized candles, paused for some time, and then dropped downward. This is the origin we need to form the base of the supply zone. This base will help us draw the zone. Step 5. Mark the zone around this origin. Single Japanese candlestick. This is simply when one candle is enough to draw the zone. The two candlesticks together often form a classic Japanese candlestick pattern like a hammer or shooting star or bullish and bearish engulfing candlestick patterns. How do you identify a strong supply and demand zone? Like in any form of technical analysis or trading strategy, there are strong signals and weak signals. To get the best trading results, we need to ignore the weak signals and take the strong ones. The perfect supply and demand trade setup will see the zone exhibiting all of these features. First, narrow price range. If the trading range that exceeds the breakout is too wide or has too many long wick candles, it shows uncertainty and is less likely to represent accumulation from a whale. Second, less than 10 candles. The demand or supply zone should ideally be between 1 and 10 candles. Accumulation and distribution can take a while, but too long, and the zone may get exhausted before the retest later. Third, strong price move. What we want to see in the breakout candle is an extended range candle. This shows a strong price move that has significance. Fourth, fresh or untested. The best zones are when the price has not revisited it since the breakout. Just like support and resistance, the more times supply zones and demand zones are tested, the more likely they are to fail. Supply and demand zone indicators. It's possible to buy supply and demand indicators that have been custom built for the trading platform. However, drawing supply and demand zones tends to be more of an art than a science, and some of the best-known modern supply and demand traders and mentors like Sam Seaton draw the zones using the rectangle tool available in most trading platforms. It's quite simple. All the great things are simple. So, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Best supply and demand zones trading strategies. If you are looking for some supply and demand trading strategies, here is what we suggest you go for. Range trading strategy. If your supply and demand zones are well identified, you can opt for a range trading strategy. Most traders use stochastic indicators to identify overbought and oversold market trends. Since rank trading is a non-directional trade, trend-wise, you can easily identify long and short entries in the market easily. Once you view all the conditions on a longer-term chart, you can then zoom into a smaller term frame to spot the perfect entry. Breakout strategy. Since prices always keep fluctuating in the market, traders look for ways to enter into the market in favorable conditions, such as in the direction of the breakout, as it could be the start of any trend. Take the example of the British Pounds United States dollar chart, which is the Forex ticker representing the US dollar's worth against the British pounds. The chart shows a breakout of the trading range, but unfortunately, goes back towards the demand zone. So, in this case, traders who opt for a short trade at the breakout are more likely to be stopped out. Thus, you need to formulate a breakout strategy and anticipate the movement of the trend back to the demand zone before opting for the short trade. Identifying supply and demand zones is essential to know about the market imbalances and changing trends. Therefore, traders need to fully understand the concept of supply and demand before opting for this strategy. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.